Good evening. This is the Elliott Wave update for the NASDAQ 100 for Wednesday, March the 9th, 2022. What a wild and extremely volatile day in the NASDAQ. Also in the S&P, but more so in the NASDAQ. The market gapped higher during Globex. And so it was already up, the NASDAQ was already up over 300 points at our opening, sank down very slightly at the opening, and then just began to rally as if tomorrow never would exist. And at one point it was up well over 500. It's closing up over 500 because to add salt to any short's wound, Amazon came out at the market closed and announced a 20-for-1 stock split. So that brought the market in the future up to a high at 38.21, almost 38.22. Now, on an Elliott basis, I'm continuing to look at this as a minute second wave within this minor third wave decline. Now, I want to just kind of include something about the characteristics and the personalities of waves, and particularly in the second wave, because second waves often retrace so much of wave one that most of the profits of any that you may have gotten during wave one are gone, and they erode away. And what finally happens is that it kind of can turn into that sellers might feel that they've got one more rally to get out of position, and they try to take advantage of that. And this is kind of what I believe is happening now, except we've had several calls of buys. Go in and buy the market, go in and buy the market, go in and buy the market. The money flow indicators are suggesting huge money is coming back in, and it's like, well, when you set everybody up to do it, that's exactly what's going to happen. So we have seen that. And now you can see that right through here and then through here, here's the money flow. We went flat. Now this all happened and dipped a little bit and then just rose back up. And now we're really approaching a level where there's tremendous amounts of money. When you go back and look at this rise, market is extremely oversold, dump more money into it. Then all the money comes back out as we decline down. Now the money's being poured back in. So I can only really determine, it's like, wow, what is going on and who needs what? Because again, while this one was a little bit broader based in terms of most of the component stocks of the NASDAQ participated in, but it really turns to focus on Google, Facebook, Intuit, Microsoft, Netflix, NVIDIA, a select group, and not all 100 stocks, but they go after the highest weighted stocks and push, such as now what they're doing in Amazon. And Amazon right now was up about over 100 when they came out with that news. Now it's sitting back down. It's resting a little bit, and now it's only up about 80. So, but in any case, I think it's a corrective wave. I think that moving into the market right now, even for a long-term basis, is very ill-timed. And if the count is correct, and I've also heard, as I described yesterday, that there is some talk out there that the expectations would be that the market would now go to new all-time highs. And even if I go all the way out and I'm looking at let's go out to the daily chart. On the daily chart, we have what can be considered an ABC down. And then this would be A, B, C going back up. So, and I'm looking at the daily. So as an alternate to what's going on, I can retrace everything, put this back as an A, put this as a B, put that as a C, put a primary A underneath it. And now we're working through a primary B wave. Now that primary B wave would be expected to get itself way back and has the potential to, again, go up and create new highs, but still corrective, but still, when it comes down to, putting an investment on, you don't care how it gets up there or why it gets up there. You just want it to get up there. So outside of all that, I still believe that we're in a corrective phase. So I'm presenting right now what the alternate view could be if we don't get a little bit of selling. Now, again, I want to just state that there's enough going on outside of the market that could take this and turn it on its nose in a heartbeat. Just a bit of news. And what I think that people are now believing, investors are believing, is that the Fed just cannot and will not raise rates more than 1/4 of a point. And again, I question that thinking, because interest rates need to go up because of inflation. And I'm not sure about the rest of the country, but as last I said, and I said it yesterday, gasoline prices on average in the United States are over $4 a gallon. Here in the state of California, and particularly here in San Francisco, that's above $5, well above $5, heading towards $6. And there's one town in Northern California, a little bit further north than here, that they're over $8 a gallon. Now, that's not inflation. I don't care how you want to measure it, but that's inflation that affects every last one of us that gets out and drives a car. On top of that, natural gas prices are going through the roof. Electricity prices are being raised here in the state of California. And why? Because the utility companies are on the hook for all of these wildfires that we've been having in our state. And they need to make profit, because they're not going to be able to turn profit and put out all this protective stuff. The bottom line that I'm trying to say is that inflation is real. And to continue to believe that the Fed isn't going to attack it is to just really be in love with a long position that you just don't want to change. Now, going back, technically, yes, money's been pouring into the market, but not out of the ordinary, not anything less than what we've already have seen in the past, like right here. Then we got this. Now we're getting this. Now, this to me, still, if we look at this right here, that is not 1, 2, 3. It's A, B, C, and it's an A wave. And then we drop in a B wave. It's a 3-wave structure down, a B wave. And now we've gone up in 5. That's a C wave. I don't have any other means and other ways to count it. So I continue to say it is corrective. I don't see how I can turn this into a 5-wave rally. Now, the C wave can continue to extend, but even that, 1, 2, 1, 2, 3, 4, 5 of 3, 4, 5. Well, I'm feeling that the 5 is now done. Now, if that's the case, we should again turn lower. But right now, as what I'm saying for tonight into tomorrow, we have to continue to leave upside probabilities in place. Now, what can happen now that we've busted up above this resistance and above that 200 so cleanly, and we've now closed above that 200? Expect more upside. So what's our next resistance zone? 13,872 to 13,900. Then we have 13,954 to 14,011. Then we have 14,085 to 14,134. That's our resistance zone. Now remember what I just said. Often, wave 2 can retrace so much of wave 1. In fact, the only thing it can't do, it can't exceed the starting point of wave 1, because then it's no longer correcting that wave. So that's how high this can go. And wave 2 second waves are noted to do just that. We witnessed it here. We're witnessing it again. The inability for the market to digest and put together a realistic picture about what's going on and what our potential is beyond me. Nonetheless, here's what I think for tomorrow. I am expecting additional upside now, because once our market opens, we get to then react and digest this Amazon news. And for all I know, they'll run this thing up to over 3,000, 3,100, because everyone is going to want to get into the stock. And if you're short the stock, you're going to go cover the stock. So this is pretty much a given. Amazon is going to drive the NASDAQ higher. The only thing that could possibly in any way stop it, and then it doesn't necessarily mean that the NASDAQ will start to drop precipitously, would be some type of news that's going to drive the selling. I don't know. There's several places that could come from, but I'm not sure exactly, what it would be or how severe it would have to be. There's enough out there. So for tomorrow, continue to look for upside. Here again are our resistance zones, 3872 to 13,000, 13,872 to 13,900. Then 13,954 to 14,011. Then 14,085 to 14,134. Those are the resistance zones. What the market can't do under this current count, so I'm not going to say that it can't do it, but the market, what would negate this count is if the market rose up to above 14,391. That would negate the count as it stands right now. As an alternate count, we could be in the process of a much larger B wave. So all is not lost. There are several possibilities in here, as I described. We could be in, if this all was an A wave down, this is a B wave working its way up. So in other words, that would be intermediate wave A, intermediate wave B, and intermediate wave C down here. And if that's the case, then this is intermediate wave A, intermediate wave B, and now we're going up in an intermediate C wave, and I definitely would be looking for this. So we have the potential. It would be covered. But again, if you're in positions that are built on downside, you need to pay attention. You need to make adjustments if necessary. And if you're day trading, I want to tell you, today was not the easiest day to day trade. For some reason, as a day trader myself, when a market opens gapped up, so when we opened, we were already up over 300 points. It doesn't really present a lot of opportunity, even though you would think, oh, look, it just went straight up. That may be true, but it really didn't. If you're trading a smaller account, it was extremely difficult because the volatility was so intense. From on a 30-second chart, the market lacked follow through on what should have been follow through. You saw a big buyer come in and they immediately flattened it, immediately brought it all the way back down without follow through. So things would rise up $15 and drop down back 10. So if on a small account, you have to be able to sit through that if you're going to hold the position, or you have to get out, or you're going to get blown out. So it wasn't so easy necessarily to trade a smaller account. If you had a larger account and you could build the position, then yeah, you likely had a very good day. But again, for tomorrow, we waited all day for this break above the 200. It held. And then finally, on the close, they ran it up and then they sold it off. And now they've run it up again and they brought it back. This is what I find incredible. is they can run things up and it comes right back down. So again, we have sellers out there who are not necessarily buying in to this whole gotta buy scenario. Now, trading tomorrow, I am sure the volatility is going to continue to be massive. Now, you may see the VIX decline, but the volatility, the speed at which this future moves around is what increases. And it was extremely high today. I would expect the same tomorrow. We have now more news driven for the bulls. Amazon will go up. They will react. And shorts are going to have to cover. And they're going to come right into here afterwards. It's the only thing it can do. It drives up the index. So again, I'm looking for these higher levels. How high they want to take it, look what they did today. It's up over 500. The Dow at one point was up over 750 points. It was bolstering against being up 800. These are big, massive moves. And there's a lot of money being pushed into the market right now. So, but I'm continuing to look at this as corrective. Even if I have to back out and call it a B wave going up, it's corrective. We can play it, but we must play smart. Again, today, day trading wasn't easy. I'm hoping it kind of clears itself up so that tomorrow that we can participate in these moves without getting killed, without having to go like, oh, we're not making any money, and then suddenly we're losing a large amount of money. If that's the case, stand back and don't trade it. Go to the options, go to a different market to make your money. So stay aware and keep moving averages in your mind. Right now, this hourly chart is lined to go up. These all need to move up and get above that 200. But you see the 4, the 8, the 20, the 50, they're already pointing strongly higher. That can all change, but they need to drop it and just go right on through all of this. And that's what I mean. If this market is not going to go up anymore, it needs to turn and they start to hit anything in its way and just drive it lower. And that would, in my opinion, have to be news driven. Something has to force the stopping to end, and the sellers are coming back in to get out of what they just bought. Okay, I'm going to leave it right there. The next update will be on Thursday, the 10th.